So can everyone see my presentation?
Yep.
Amazing. Thank you so much. All right. So welcome to our 2024 Tax Planning Masterclass. I'm your host, Diana. I am the director of Balanced Tax Accountants. I started that accounting firm 9 years ago through a Facebook post. Believe it or not, I got my tax agent license and I didn't have any clients because I just started. I didn't buy a business. I just started my own. So I went on Facebook and said, hey, anyone who knows me who might want to get your tax done this year, if you'd consider booking with me, I would love that. And 9 years later, here we are. We've served over 5,000 small businesses across Australia through the business. And I have a couple of successful businesses myself. So it's not just about, I'm not just an accountant talking about, tax law and accounting things. I actually have real life experience running businesses in real estate and the automotive industry. And so I have quite a bit of experience when it comes to when I speak to business. I'm a registered tax agent and fully qualified accountant. And together with me today is Marilyn. Marilyn, wave to everyone. So, Marilyn is our tax manager at Balance Tax. She has over 12 years of accounting and tax experience. She is basically like a human version of a walking tax dictionary. Yes. But like in the best way possible, okay? Like she loves to explain these really complex things and help people save money on tax in really easy to understand ways, and that's one thing I absolutely love about her. She's a qualified CPA and she has a lot of really fancy master's degrees that she hangs on the wall of her office. So thank you for joining me today, Marilyn.
It's
All right.
exciting to be talking about tax, so happy.
Our favorite subject. Well, helping people save money and tax, right? Because tax can be so anxiety inducing, especially because when we were growing up in school, I don't know about you guys, but I was never taught anything to do about tax. And I just find that whenever there's something that I don't know anything about, sometimes I just want to put my head in the sand and ignore it as if it's like not real and it'll just go away. But the issue is, guys, the ATO, they're not going to go away. Okay. They're like, the way I describe the ATO is they're kind of like dealing with a toddler. They really hate being ignored when they want attention. So if you ever find the ATO sending you messages or anything, the worst thing you can do is ignore them. Literally, if you don't know what to do yourself, just reach out and ask for help. There's lots of wonderful accountants out there who would love to help you. We would love to help you if you feel like we're the right fit for you. But yeah, so here's some ways in how we help our clients. We, excuse me, let's take some water. All right, we do business structure setups, everything to do with the ASIC and ATO compliance, lots of tax returns, yeah, thousands of tax returns a year. It's so good. Like when I look at the amount of money that we save our clients, because when somebody comes to us for tax, we don't just take their numbers and plug them in the software. We actually look at all the other clients that are in similar industries, similar type businesses, similar situations. And if somebody has claimed something that you have left out of telling us, we're going to sit there and we're going to ask you about it. Are you sure you didn't have this? You didn't have that? So we're like constantly looking out for you. That's one of the benefits of having a tax professional help you prepare your return. Um, we also do self-managed super funds and ongoing bookkeeping. And we've got a new Sole Trader Up service that I'm going to tell you guys about at the end of this presentation. But yeah, so I just left the service word off the page. Sorry, guys. You see it though, you see it. Okay, so what is tax planning? First of all, good on you for everyone who signed up to join us. We had 15 people registered, so to have this many people join us live is actually quite amazing. So thank you so much for being here. I know that when it comes to tax planning, it's a word that's thrown around, but there isn't really a definition out there that's like easy to understand. It's kind of like this airy-fairy thing that it's like, oh, that sounds good. I feel like I need that, but I actually don't know what that is. But after this conversation today, you are going to absolutely know what that is. So, tax planning is managing your business money in a way that builds wealth and minimizes your tax at the same time. So it's really important that we build wealth because we need our businesses to survive, to afford our lifestyles, to feed our families, to go on holidays, to create our impact in the world that we want to make. The reason why we started our business. We want our business to be successful and to continue for years to come in the future, right? And so you have to have a wealthy business, one that's profitable. But at the same time, we don't want to overpay tax, right? And so that's what we're doing here today is we're educating ourselves on all the things that we need to make sure we're doing to make sure that we're not going to overpay tax to the ATO. Everyone should pay their fair share of tax, but let's not overpay tax. Let's be smart about it, right? That's what tax planning is. All right, so some things that we're going to run through just to make it really simple and easy. So, one of my gifts as an accountant is I have this gift to be able to explain things in a way that is really simple and easy to understand, even though a lot of these topics can be quite complex. Okay. So I have broken it down into literally like five things. So end of year business review. This is how you do tax planning. So we're going to do an end of year business review. We're going to look at the changes coming for the individual tax rates. If you are a sole trader, this directly applies to you or anyone who actually lodges an individual tax return. We're going to talk about how you can plan for your invoicing to shift income into another tax year legally. All of this is very legal, by the way. I would never mislead you or say something that is not actually something you're eligible to do under the law. Um, I'm also going to share with you how to maximize your tax deductions in your return this year and also give you some super tax hacks. Contributing to superannuation is one of those things where you really got to weigh up, is it the best time for you to contribute to your future self and pay your future self, right? That's what super is. Because once you put money into super, you can't touch it until your preservation age. And for most of us here today, that's not going to be until we're 65, 70, maybe even 75 years old by the time we get to that point. And so we really have to weigh up what to do, but we'll get into more of that. All right. Excuse me. Okay, end of year business review. Let's kick off with this. Now, this is where you've really got to know where you currently are in order to be able to do this. So if you haven't done it yet, or if you don't do it on the regular, excuse me, I want you to look at your sales and your expenses for this tax year so far. It's the last week of June. So if you have accounting software like Xero, MYOB, Rounded, any of those, you can go and run reports in them as long as your bank rec is reconciled up to date and easily see how your business has done this year. If you do not do this on the regular, that's something that I would love for you to commit to starting to doing from July onwards, okay? For this new financial year, new you. We're no longer scared of looking at our numbers. We're no longer putting our head in the sand thinking that everything's just going to get better or it's going to go away. Our problems are going to go away if we don't look to try to solve them. And so one of the most simple things that you can do to overcome your fear of finances, if you're someone who feels anxious about looking at your numbers, or maybe you just don't even know where to start, is to actually run your profit and loss. I would do it once a week. If that's too much for you, once a month, I'll be happy with to start with, just so that way you can start to get familiar. Where is your money coming in from? Where are your sales coming from? What kind of sales are you making? Of all the different services or all the different products you sell, how much money came in from each of those things in this last month, right? These are all questions to ask yourself. Then you look at your expenses and you think about, okay, where did the money go? What did the business spend money on? Now, one thing that you'll notice with me is I'm very, very mindful. When I'm talking about our businesses, I will never say it's me. I am not my business. You're not your business, okay? Your business is its own entity, its own energy. Now, if you are a sole trader, ABN holder, then legally you are your business, right? But the biggest money mindset shift that I can give you today is to separate your business from yourself. If you go out and you try to start a business and it doesn't turn out the way that you expected, it does not mean that you are a failure. It does not mean that you'll never be good at business. It doesn't mean that that is like your destiny, okay? Like, the business is its own energy, and it's really important to have this mental separation between what is the business and what is you. That also translates into how we show up for our business money. We need to have our business money separate from our personal money, okay? So, looking at your business numbers, you're gonna look at your profit and loss, which is your sales less your expenses, and what is your net profit. Because remember, in business, it is important how much sales you made. It's so important, right? We need sales because the business needs money to survive in order to be open for tomorrow to serve more customers, right? But what really matters is how much you keep at the end of the day, and that is net profit. Net profit is what is going to help you build wealth. So your goal should be to increase your net profit every year, okay? And if you're looking at your numbers and it's negative this year, it's a loss, if you are in the early stage of business or the first couple of years, did you know most businesses take 3 years to turn a profit? Okay. So if you are in the first 3 years of business and you're looking at your numbers and there's a loss, I want you to know that you are not alone. Okay. Because in business, you have to spend money in order to make money. And if you are new to business, you're a year in, 2 years in, and you're already making profit, then hats off to you. Well done, because you have got a profitable business. You got something to work with here that you can grow and build upon for the future. Okay, so when you look at your numbers, excuse me, there's some key things that we've got to look at in order to remain compliant with the ATO. Okay, some business milestones, if you would. Okay. So first, the question I want you to look at, have you made 75,000 in sales across the last 12 months of trade? Because if you have, and you're not registered for GST, you must register for GST. It is legally required once you reach sales of $75,000 across 12 months in a row. So it's not a financial year, it's across any 12 months of trade in a row. Okay. Um, Now, when you're registered for GST, in short, what that means is you've got to charge GST to your Australian consumers, and you also are eligible to claim GST on your expenses. It means you need to do a quarterly BAS return with the ATO, quarterly in most cases, and it's definitely something that if you're going through this, you're going to want to call in bookkeeper or accountant support. Okay, I wouldn't try to figure it out yourself because you need to track the GST coming in and leaving the business. All you need is a little bit of like help to get started and get set up right once you're registered, but then you'll be able to carry forward yourself through your bookkeeping software after that. Okay. Um, so that's the first thing we want to look at. The second thing is if you're a sole trader and your net profit is sitting around the $100,000 mark, so that's not sales, that's net profit, right? When you're looking at your profit and loss. If it's around $100,000, then it might be time for you to start thinking, I think I might need to become a company within the next, short time frame. Now, the reason why I say that is because companies have a flat tax rate of 25%. Sole traders, the more money you make, the more your tax rate increases. So sole trader tax rates start off at 0%, and it goes all the way up to 47%. Okay. And so where sole traders and companies pay 25% tax each is around the $120,000 mark. Okay. So that's why I say when you start to get to 100,000 in net profit, that's when you want to start looking at, should I be a company? Okay. All right. Next thing is when you look at your profit and loss, it's good to just take a step back. Make yourself a little bit of like a cup of tea, a coffee, you know, and I want you to just look and see, how did my business do this year? How do I feel about these numbers? How are my sales looking? Am I happy with the amount of sales I have? What do I want to take as a learning from this year? And what am I doing well in business? Obviously, you're here. So you are doing some level of well. You might not feel like it because We are our own worst critics sometimes in our minds, thinking about we're not good enough. Oh, we could have done this faster. We could have done this better. All these things. But basically, I want you to look at your numbers and think, what do I want to carry forward? What would I do well that I want to carry forward into next year? And what do I not want to do anymore? What is not working for the business? Okay. It is 100% okay to take a step back. And if things are feeling hard or if they're not working, we don't have to carry them forward into the future. That is the beauty of business. It gets to be what we make it. We are the creators. We are the directors. We are the CEOs of our businesses, right? And so our business runs underneath our management and our direction. And so it's okay to look back and think, oh, I didn't really quite do this the way I wanted it to. What can I do next year to change it? Okay. That's okay that it happened. Just recognize that and then let it go. Don't let yourself feel bad about it. Okay. We can do something different tomorrow, today, tomorrow, to change tomorrow. All right. So that's our end of your business review. Then we want to talk about creating business wealth. So, how do we build wealth through a business? Why are we running a business? We're running a business for a lot of different reasons. But basically, one thing that I notice, especially in small business in Australia, is there seems to be this block. It is not okay for us to say we want to make money. We need to make money. Okay. Making money is a foundational premise of running a business. If your business does not make money, then it will not be around tomorrow. It will not be around a month from now, a year from now. You might be able to last a little bit longer, but eventually, if your business is not profitable, you're going to run out of money and you're not going to be able to do it anymore. And I don't want that to be you. So let's talk about some things that you can implement in your business to create wealth, okay? We want to build business wealth. We want to build businesses that can support us, that not only pay the business expenses, but also pay our personal expenses and fund our lives. So the first thing is I would practice mindful spending. Mindful spending is being really intentional with where the business spends its money or invests its money, is how I like to say it. Because when I spend money in my business, I think about how is this going to make the customer experience better? How is this going to bring more customers into the business? How is this going to make our existing customers feel even more supported? How is this going to return more sales, more revenue into the business later? How long is it going to take for that to happen? If I spend money on marketing today, how many customers am I going to get? And how long will it take them to come in to the business, right? That's just like for marketing, but you can apply that to any type of expense, okay? That type of thinking. So we want to be really intentional on spending money on things that matter in business. And what I mean by that is things that either make your life easier, make your time, easier spent in the business, make you feel more supported as the business owner. Because as the business owner, you are the number one asset in your business. Because without you, your business would not exist, right? It comes from you, right? It is not you, but it comes from you. You started it, you're directing it. So, anything that you invest in making yourself work more efficient, have clear boundaries, manage your time, help you feel supported, that is 100% worth it in business, okay? So we just want to understand that when we spend money in business, what's the benefit of the business before we buy? The next thing is to look at your profit and loss. And this is what we talked about in our end of financial year review. And I would put together a little money date in your calendar. Make it a finance Friday, make it a wealthy Wednesday, a money Monday. Like whatever it is that aligns with your schedule, block out 20 minutes, just 20 minutes to look at your numbers. It can be once a week, it can be once a month. Just have a look, okay? And just see what you see what you notice. Because what you'll notice is over time, you'll get more comfortable with where the money is going, and it will help you make better decisions as a business owner. Okay. And lastly, if you have established consistent sales in your business and you don't have the business regularly paying yourself, that is something that I would ask you to start doing. Okay. What do I mean by this? So for sole traders, this is not a legal requirement, okay? You are allowed to go into your business bank accounts if you have sole trader business bank accounts and take money anytime you want because it is your money. You're the legal owner of the business, okay? What I mean here is I want to set you up for wealth habits to support you into the future. So, one way to do that is I want to make your personal account be automatically topped up by the business, just like you're on payroll from your business, but you're not on payroll. Okay. If you're a sole trader, I just want you to set up a recurring bank transfer for whatever amount that the business can afford to pay you. So that way, let's just say it's $500 a week to start off with, right? So you set up a recurring bank transfer, and $500 every Friday gets put into your personal account. What this is going to do is this is going to make you look at your personal account and think, wow, my business is paying me. This is so good. This is what I'm working for, right? Um, it's also going to have you feeling like you're coming from a place of abundance and not from lack when it comes to your money decisions, because you're going to be like, wow, my business supports me. Like, and you're going to have evidence of that in reality because the bank transfers are coming through. Okay. So if you're at the point in business where you've established consistent sales, I want you to mirror what it would look like if you were on payroll, but you're not going to be on payroll. What this is going to do is this is going to prepare you for the day that your business grows and becomes a company, and then you're going to have to do this because the only way to get money out of a company to yourself on the regular, well, the biggest way is to put yourself on payroll. Okay. And so then you're going to have to do this. So I want you to start these habits now. I want when you get to a company to be like, oh, yeah, I'm already used to that. Like, that's not going to be a drama. I have to put myself on payroll. I've been doing that for ages. Right. So we want to establish money habits. They're going to set us up to create more wealth and accept more money into our businesses and into our personal bank accounts in the future. Okay, stage three tax cuts for individuals. So the media has talked a lot about this. Um, okay, so basically, what this means is that all income earned in Australia or paid in Australia from July 1st, if in your individual tax return, you are going to get reduced tax rates compared to the current year. Okay. So this is for your 2025 return, not your 2024. And that's actually one of the biggest misunderstandings. So the tax rates for individuals in 2024, this year that's about to end in like 2 weeks or 1 week time from now, is going to be a little bit higher than the income tax that you're going to pay next year. Okay. So, what does this mean for us as sole traders? If the tax rates are going down next year, what we want to do is we want to plan to put, if we think that next year is going to be um, a big year in business, we want to plan to put more income into next year. So, in a second, I'm going to talk about how you can legally do that. But just know that individuals on the money that you are paid and you earn in your business this financial year, you'll pay a higher percentage of tax than you will next year. Okay. Um, so, let's get into what that actually means. So, in your business income and expenses, remember you are managing your business. You choose where the money is spent. You also choose when you invoice your customers. And so, one thing that you can do to influence whether or not your tax deductions or your taxable income, your sales, get reported in your 2024 return versus your 2025 return is the timing. So, if you pay expenses by June 30th, this year, you claim the tax deduction in this year because the way income tax works is you claim the deduction in the year that you paid for the money out of the bank account. Okay, like the year you paid for the expense out of the bank account. So, what you can do is look at if you think that you're going to have a really big income year this year and next year is going to be quieter. Maybe in business, you know that you're not going to be able to work as many days a week in your business. Or maybe you anticipate that for some reason it's going to be less profit next year, okay, or smaller trade. Then it might be smarter to put some expenses in this year because that's going to help get your tax down and you're going to have a little bit of tax savings in this year's return because this year has higher tax rates. Okay. So just have a look at what you've got going on. If you think that if you think that your business is going to grow next year, then there really isn't any point in claiming or buying something for these end of financial year sales. Just beware of them. They're marketing. Those are businesses trying to make sales too. Excuse me. So just keep that in mind. Be careful of end of year financial marketing. And Yeah. So what you want to do is practice mindful spending. So it comes back to that every time. Is this something that my business needs? This upgrade? Do I need to upgrade my equipment? Does the business need it? When will it bring future revenue into the business? How will it help me run the business more efficient? How will it bring more customers in, right? Literally, you can just go back to that every time. It's like business wealth gold right there, mindful spending. Okay, something else that you can do is remember you're the one who controls the invoicing for the most part in your business, especially if you're like some type of like if you do project invoicing and things like that. So if you know that you've got a big project that's, come on board now, the client has said, "Yeah, we want to go ahead." What you could do is you could wait to invoice them on July 1st. So that way when they pay you, the money goes into your 2025 tax year return and you will pay less tax on that money because the tax rates for individuals are going to go down next year, right? So that's something you can do is you can choose when you're going to delay the invoicing or when you're going to issue the invoice. A big question that I get asked as a tax accountant is how do I buy a car and claim it on my tax? And there's a couple of things to go along with this, but basically, just know that you're only eligible to claim the business percentage use of your motor vehicle. So you can't buy a car and claim 100% on tax unless you actually use it 100% for business. Okay. The other thing is sometimes it always makes me a little bit nervous when I get emails from clients and they'll go, "Oh, Diana, I want to upgrade my car. Um, they have this really good deal going on, or I can get really good finance, whatever. Um, should I do it?" And I always ask, what kind of car are you looking at? Like, what kind of budget are we talking about here? Because I've had people go and drop like 150K on a car and expect to deduct the 150,000 that year off their tax. The ATO has something called the luxury car tax limit. It's $89,000 for fuel efficient vehicles or 76,000 for all other vehicles. Okay. So that means if you go and you buy a car for business and it's 100% business use, and it costs more than 76,000 for non-fuel efficient vehicles, then you can only claim 76,000. So just keep that in mind, right? We don't just want to go and spend money just to get a tax deduction. That's never a good idea. In business, we want to spend money to make more money in the future, okay? To make our lives easier running the business, to serve our customers better. That's why we want to spend money in the business, okay? Um, Getting tax deductions is just like a bonus, It's like a smart way of like, oh, okay, well, this is already a good business purchase. Tick. Number two, how can I maximize my tax with this purchase, right? So there's a little bit about the car rules when it comes to tax deductions. If you are a product-based business and you have stock on hand, you've got to do a stock take at June 30th every year. If you have more than $5,000 of stock on hand at the end of the year, then you might have to pay some tax on your stock balance. So it's really important to do this if you're a product-based business. Okay, some common tax deduction errors that you're going to all avoid because we're having this conversation today. Whoop whoop. So, motor vehicle deductions. I talked about actually deducting the cost of your car off tax, but let's talk about like your running expenses of your vehicle. So, the best way to get tax deductions with a motor vehicle, like driving, to go see clients, driving to business events, driving to trainings, driving to alternate work sites that aren't your normal workplace. Commuting is not included in, is not claimable. So anything outside of commuting, though, is. So if you drove for business, there's two ways to claim deductions. One, the lazy way is to do the cents per kilometer method. That's where you can claim up to 5,000 Ks a year for business. And every year the ATO assigns a cents per kilometer rate that you can claim. Okay. The other way that takes more work, but it's worth it if you drive a lot for business, is keep a logbook. A logbook you have to keep for 12 weeks in a row. Okay, it's per car. It's good for 5 years per vehicle. And but what happens is at the end of the 12-week period, you're going to have a business percentage use. Let's say it's 80/20. So 80% for business, 20% personal. If you go to this effort to keep a logbook, you can claim 80% of your motor vehicle, your rego, your interest on your car loan, your car insurance, anything like that. Okay. So this is where it's worth it to do the logbook, but only if you drive a lot for business. Okay, the other common tax deduction error is having a work deduction claim but no connection to income. Or the other thing is you can replace work with business, okay? The general rule, and if you ever find yourself wondering, Diana, can I claim this off my tax as a business expense? Okay. I want you to ask yourself this question. If I wasn't running my business, would I be spending this money? I should literally trademark it because it's gold. If I wasn't running my business, would I be spending this money? If you weren't running your business, would you have taken that client out for a coffee? Probably not. Business expense. If you weren't running your business, would you have invested in your business coaching? Nope. That's a business expense, right? Do you see? So that makes it really clear if it's business or personal. And so knowing what you can claim is literally half the battle because a lot of people don't know what they're eligible to claim. Okay. Um, we talked about motor vehicles. The other thing you can claim is working from home deductions. There is an hourly rate that if you work out how many hours you work from home during the year, you can claim that rate, and that's meant to be the like average cost of running a household in Australia. So there's also a percentage of your actual bills and stuff like that you can claim. You can go a little bit if you want to go to a little bit more work, you can work that out. But basically, home office deductions and motor vehicle deductions are two of the most missed business deductions. And the other thing is because people don't have accounting software. Accounting software these days, the way it all works is it connects to your business bank account. And so it imports all your business transactions, well, all your bank transactions for you overnight into your accounting software. And so all of your expenses are there. Okay. The difference between someone who has accounting software and someone who doesn't, is someone who does not have accounting software. When it's time to do their tax return, what do? They go to their bank accounts, all five of them in three different banks, and they export the transactions into Excel for 12 months. How overwhelming does that feel? Oh my God. Troll through them, can't remember for the life of them what they bought at Kmart 12 months ago. And they're trying to work out what is business and what is personal. This is where it's really important for you to separate your business money from your personal money. If you're a company or a trust, you have to legally do this, okay? But if you're a sole trader, that's one of those habits you want to get in now, because what that is doing is it's preparing your business to receive more in the future. That's what we want for you. We want your business to grow. Okay, donations given to an unregistered charity claimed incorrectly. So this is like, if you guys have ever heard of the MSWA home lottery, what it is, or any type of lottery in this way, where you are donating to like a good cause, right? But in exchange, you get the chance to win something. That's not claimable off your tax. But if you were to go to a registered charity that's on the donation gifts list, then you're eligible to claim it. Okay. So it has to be a registered charity in order to claim it off your tax. The other thing is when people sell shares, if you have shares in crypto, people often calculate the tax on those sales incorrectly. And so the ATO said that's actually one of the biggest things that people get wrong, is they claim the sale on their investments incorrectly on their taxes. So yeah. All right, some super tax hacks for you. So this is where we've got the first home super saver scheme. This is where if you're going to buy your first home, because you haven't bought it yet, you can contribute additional money to your super. And then when you go to buy your first home, you can take some money out. You ask the ATO permission, and they will approve it to allow you to buy money out, borrow money, take money out of your super to pay for your deposit for your first home. The other thing is the government co-contribution. Now, this is income capped, okay? The way that the tax law works in Australia is it's true. The more money you make, the more tax you pay. That's why as your business builds wealth, it's going to be so important to make sure you're on top of tax planning, you're on top of keeping on top of your tax deductions, you're tracking your expenses, because the more money you make in Australia, the more tax you will pay. It's facts. The way the tax law is written, there's a lot of things that are available to low income earners, or what they consider to be low income earners. So like this one, If your taxable income is less than $58,000 and you put $1,000 in your super before June 30th, then when you lodge your tax return, the ATO is going to pop an extra $500 into your super for you, free money. Okay. But in order to be eligible for this, you have to make the contribution by June 30th and your income has to be below 58,000 in your tax return. Okay. You don't have to do $1,000. You can do $800 and they'll put 50% of it in there. So there's some free super money from the government. Okay, if you are a company, I'm just going to speak to companies quickly. I'm not going to go into too much detail, but basically for companies, if you're a company structure, there's only a couple different options of how you can legally get money out of your company and into your personal bank account, okay? And this is where that separation mentally and realistic, like logically, realistically, in reality, you have to have your business money separate from your personal money. It is required, okay? Not optional. Sole traders, kind of optional up to a point. You're just gonna be pulling your hair out wondering, oh, where's all my business expenses at if they're in 5 different bank accounts? Okay, so the ways that you get money out of a company is you pay yourself wages through payroll, or if the company has made profit and paid tax in the past, then you're eligible, the company's eligible to pay you dividends to shareholders if you're a shareholder. Or there's a Division 7A loan, which, to be honest, you don't want to deal with this. This is only like if you're in a bad situation and there's no other option, Division 7A loan. It's where you borrow money from your company, but then you have to pay it back with interest and make regular repayments at standard interest rates. So it's very messy. And so I'm trying to set you guys up with habits so you don't get into a situation like that. Okay. Yeah. Um, if you don't have a director ID, you need one, so please register. The fines are very large if you don't have a director ID. Um, keep a logbook if you have a company-owned vehicle, because that's how you maximize your tax deductions. And if your employees or anyone who's related to the shareholders, directors are given benefits from the company, then you might need to pay fringe benefits tax. So there's something to be mindful of in case you didn't know, because not everyone knows that. What do I mean by benefits? So the best way is for the company to put you on payroll, and that's how you get money out of the company on the regular, okay? But sometimes the company can do things like pay your home electricity bill, or I mean, there's nothing physically stopping you from doing that if you have a company. You can pay your home electricity bill from that, right? But you're only eligible to claim the business percentage. So for the personal percentage, that can be seen as a fringe benefit. That's just one example, okay? So we really want to have all the business deductions in your business bank account. All right. Um, all right. And then after this, I'll go to live Q&A. Sorry, to the comments in the chat. So basically, the one thing that I mentioned earlier is when I started this is at Balance Tax, we're quite forward thinking. We really are. And basically, it's not good enough for an accountant to just do your tax anymore. I mean, if you go online, you can even see it in all the Facebook groups. I'm looking for an accountant, but I want advisory. My accountant just does my tax. My accountant doesn't ever tell me, give me any business advice or anything like that, right? My accountant takes 10 weeks to respond to my question over email. That's a good one. Or maybe they never reply. Or maybe they just send me a booking link, right? So balance tax, one thing we're going to do differently to help support sole traders specifically is we're going to do live sole trader Q&A sessions every quarter. Okay. So if you book in your sole trader tax return with us, then you get access to the quarterly Q&As for that year. So basically every quarter, our accountant team is going to go live on Zoom and answer any questions that you guys have for free. It's literally it's going to be a value added included in the tax return price. So if you book in your sole trader tax with us, then that's how you can call quarterly support in. Because when I really thought about this, I just made this up, by the way. Because what I do in business is I'm really good at listening and then figuring out how can we help support, right? Sole traders, I really don't feel like sole traders need to have a monthly meeting with their accountant. You know what I'm saying? It's just like every quarter to just check in. How are things going? What can I do better? What am I missing? This and that. That's what this is meant for. Okay. And the other thing is life gets busy sometimes. I understand that. So it's not like you necessarily have to join every quarter if you don't want. It's just there if you want. And it's a way for us to support you as your accountants even better. Okay. Whoop whoop. So that is that. So yeah, Balance Tax Accountants, that's our firm. We do all kinds of accounting services. Yeah. So in summary, you guys are going to be all set for tax planning.